Okay, so now I'd like to hand the floor over to my colleague and dear friend, Ben Simpfendorfer. Good morning.
Welcome all. My name is Ben Simpfendorfer. I'm a partner at Oliver Wyman here in Hong Kong. We've had a fabulous PBEC Dialogue week so far, 6 events, over 40 speakers covering a range of terrific subjects, the future of APAC, the role of family offices, the future of the blue economy, key takeaways from COP26, as well as innovation and technology in education. I hope you've had a chance to attend some of these. I also hope that you're registered for events both today and tomorrow. Today's event, though, is discussing supply chain resiliency in Asia, a hot topic at the moment given global supply chain disruptions, but also the importance of Asia to the global supply chain. We account for over 40% of the world's exports, 65% of the world's container throughput. We are critical to solving today's challenges, and that's why I'm just delighted that we have a fabulous lineup of speakers. But supply chains remain in stress. Power shortages in China, COVID-related disruptions to manufacturing in Southeast Asia, shortages of drivers across Europe and North America are just a few of the factors in a long list that are causing disruption. But is that stress about to peak? Or is there a more permanent and fundamental change underway? Well, on the more optimistic side, US consumer demand is likely to revert to pre-COVID levels. And that means a little bit less spending on goods, a little bit more spending on services. And of course, we don't need to ship services. Supplier times and component shortages are at all-time peaks. But usually at this point, indicators begin to revert to their mean, and they often revert quickly. We're already seeing inventories in Korea and Japan rising more sharply than our shipments, and that's all a good sign. But on the less optimistic side, the Eurozone is reporting that companies have shortages of components, raw materials, labor at levels that we haven't seen in 40 years. Globalization is also on the back foot. Geopolitical concerns remain a risk. US-China trade tensions persist and could return to haunt us all. You know, we're used to living in a world where demand is the constraint, not supply. China's emergence as the world's largest export manufacturer meant we've come to rely on the country as the supplier of last resort. And that's not always possible anymore. Today's supply is the constraint, not demand. You know, pre-COVID supply chains were already shifting in response to either globalization or price concerns. The consumer goods sector in particular, garments and footwear or electronics, were beginning to relocate factories out to other markets, such as Mexico and Vietnam in particular. But there's less evidence that the manufacturing industrial sectors were moving, and well, they're capital intensive. It's far more expensive to shift a factory. At the same time, the return or the spread of the pandemic has put a halt on the ability of investors and operators to go out and visit new factory sites and to spur that relocation trend. So where are we today, and what does it all mean? Well, we're delighted again to have 5 fabulous speakers who are going to talk across the subject, looking at the role of governments, the outlook for sea freight, the future for sourcing, views from the ground in Bangladesh, as well as a macro overview. So it's with great pleasure I want to invite our speakers today. Christine Loh, Chief Development Strategist, the Hong Kong University of Science and Technology. Amita Maheshwari, Asia Head of Supply Chain Development at AP Moller Maersk. Anson Bailey, Head of Consumer and Retail ASPAC, Head of Technology KPMG China, and a Director of PBEC. Asif Ibrahim, Director Bangladesh Garments Manufacturers and Exporters Association, and Chris Clegg, Asia Editorial Lead Trade and Globalization at the EIU. Each are going to speak for around about 10 minutes, and a little bit of housekeeping as well. There is a Q&A function. You're probably all very familiar with that. Please do ask questions during the session. I'll make sure those questions are asked to the speakers directly. But let's kick off our session with Christine Loh. Christine, over to you. Thank you.
Okay, well, thank you, Ben. Perhaps what I can start off with is just to press home some trends that I see the immediate period of supply and demand, we could say that there's a confluence of events right now that is causing these supply and demand pressures. But what are some of the trends that are on the horizon that will affect us going forward? Well, one of the things that I see is climate change. And, following on from COP26, one of the things that has come about, and I think this is going to have a great impact on all businesses and industry, is that the world has now bought into 1.5 degrees. The reason I want to press this is the Paris Agreement talks about 2 degrees and best effort to achieve 1.5 degrees. But actually, if you look at what the world is now talking about through the governments, you see they're all talking actually about 1.5 degrees. So also when you see the huge group of gatherings of business people and NGOs in Scotland during COP26, you have many businesses saying to each other and to the world that the governments are possibly not moving fast enough and businesses need to surge ahead. But what does that mean, surging ahead? And what are they surging ahead for? Well, the aim is 1.5 degrees, right? Getting to the world carbon neutrality earlier, and we've set 2050 for ourselves. So the point I'm really trying to make here is when governments and when businesses start really to think about 1.5 degrees, and when major industries start to look at a timeline and 1.5 degrees, it will lead them to doing a lot more sooner. So the question therefore is, how is it going to impact on supply chain? Okay, so how is it going to impact on supply chain? And when we're looking at supply chain, we're looking at raw materials, where they are. We're looking at where things are being manufactured, and we're looking at how to transport them. These are the three main areas. So when you're looking at countries like China, when countries like India are saying to themselves, we're going to phase down on coal. Right, they didn't say they're going to phase coal out by 2030, because that's actually impossible for them. But to phase down coal, and when you have a country like China, which is the 1,000-pound gorilla, as the largest manufacturing economy, also the largest user of fossil fuels, and 57% of their energy coming from coal. For China to have put out quite specific plans and political and policy targets to peak coal by 2030 and then go for carbon neutrality, for China to ramp up renewable energy. The simple question we can ask ourselves is, let's take China for their word. This is what they're going to do. How will that change the commodities market? And I think people are still kind of trying to really figure out what that means. And then when you multiply it to the countries that are, they're going to have, for those who haven't put out plans yet, they are going to have to, we're going to see a completely new picture of the commodities market. Then you can immediately also ask, well, how's that going to impact on manufacturing? So for example, again, if we take China, China is exporting all kinds of things to the world. If China were able to lower its carbon emissions for its export products, well, that's obviously a good thing. And I assume that's actually what will be the case. And that's what China is going to aim for. Now, what are then some of the industry? What are they looking at? One of the industries that I've had the pleasure of working quite closely with is fashion, textiles, and garments. So we happen to have a very aggressive and very good research and development center in Hong Kong for the fashion industry. And they have so much interest from the big brands, from the large big brands. And it's going to be about the whole circular economy thinking. It's going to be about using less resources. It's going to be about recycling old and used clothing and textiles. And the other thing that we're going to have to think about is, as we see people move production closer to where customers are, they are going to be able to lower their carbon footprint. So if the world this is why I'm linking it to the 1.5. Apart from the geopolitical conflict between US and China, the other issue is if people are going for 1.5 degrees, they're going to have to look at all the different ways where they're producing and shipping things in a way that allows their products, when sold to consumers, to be much lower carbon. So is there a transition really coming in? And I think you have to maybe look at least 10 years or so to see this trend coming. So again, and maybe Amita will know more about this than me, but tomorrow you have a meeting at the International Maritime Organization where, so, you know, the IMO, they regulate international shipping. But what has happened is the IMO had suggested that the shipping sector could decarbonize by 50% by 2050. But actually, the shipping community is now saying, no, we should go carbon neutral by 2050. So, you know, what that means, again, to, and why are they doing this, right? Because of net zero. And if they're doing this, this will also have a dramatic impact on the supply chain. So what I'm saying is industry themselves, not just governments, are coming together to want to go faster, right? So you have technology, R&D, you have digitalization, which is vital because everybody wants to measure everything. We already see the rise of ESG. You're also seeing the rise of life cycle analysis. So these are all things that are happening around supply chain businesses. So I feel that as we go forward, we also need to watch all of this to see how that is going to impact on supply chain. And if we're looking at companies that are on the different trajectory of supply chain, obviously everybody needs to work together to get that product made and shipped in a way that is the lowest carbon possible. So you're going to see a kind of big let's get together, you know, because you're going to need everybody to collaborate on this in order for that end to happen. But my last line, you know, the last thing I want to re-emphasize is there seems to be now a real drive based on science that governments have signed on to, 1.5, and businesses have signed on to. And that will have, you know, that will have persistent longer term impact on supply chains.
Christine, thanks very much. Can I ask, you've worked in the private sector, you've worked in government, you've seen both sides. Should governments intervene in markets more aggressively, or do we expect too much of governments? Oh, you're on mute, apologies.
Government isn't one government, right? You know, we are talking about different types of governments and government systems in the world. So perhaps at one end, you have governments, including the one in China, that are very government-led, right? They're state-led, they have state-owned enterprises. So, and China happens to be very big and very dominant in this sector. So when China says, look, I've now got a whole range of new policies coming, in fact, China is saying my entire development and pathway is going to be a revolution towards net zero. You know, so that means the state-owned enterprises are all going to come up with net zero plans. You're going to have the private sector also kind of going along because there'll be policies, regulations, guidelines, you know, more than we can keep up with within the ambit of what China has said it's going to do. Other governments, perhaps other governments that are looking at more market-driven. Well, one of the themes that have come out is, can the dominant economies that are now getting ready for a carbon trading, right? You know, EU already has one, China is getting ready. To what extent will the US be a part of this? So they're talking about the role of completely new markets, new products, you know, trading emissions, right? I mean, you know, whilst it's been taking places in certain pockets around the world, you know, like the EU, but this is a completely different idea for the world. And then carbon credits, right? You know, people in different, for example, in Australia, you know, with their forestry and so on, will these things generate carbon credits that could be used for people along the supply chain to reduce their their carbon footprint. So these are all kind of new things for the world.
Christine, thank you. I know China's come under criticism for the fact that she didn't attend COP26, but you've given us hope that the country is already engaged in sort of very practical initiatives to lower zeros, which is exciting. Thank you. Amita, I'm going to turn to yourself now, to our audience. Amita is Asia Head of Supply Chain Development at AP Moller Maersk. Very keen, Amita, to get your views on the market. What's in store for us?
Thanks, Ben, and thank you. It was really nice to hear your views as well, Christine. I'm just going to put up some slides here to kind of assist with the discussion, but do let me know if you can see them, please. Okay, thank you, Anson. All right, so as Ben mentioned, I'm with AP Moller Maersk. I'm based in Hong Kong, and I've been with the company 17 plus years. And my work focus has been covering geographies of India, Bangladesh, and of late the Asian markets. And at Maersk, we work with companies around the globe and across a wide range of industries and segments. So we are often an integral part of the supply chains of these companies, and that gives us good insights into how these companies are basically going through these recent unprecedented events. Today, I would like to take this opportunity to share with everyone here the complexities and the actions as learned from our customers and the supply chain executives and professionals in their organizations. So as you see here, we all know that the end-to-end supply chains today have been impacted in all components, whether that's demand or supply or distribution. So on the demand side, when the pandemic broke, initially there was a stop, right? Everything was suspended. People were not really going out to buy anything. And when markets opened up, or there were ability for people to go out and purchase stuff, the focus was immediately on essentials and health equipments and PPE stuff and all. What it also meant is on the supply side, our customers had to almost overnight switch manufacturing to the commodities or the products that were required by the consumers, that were in demand. And that was a big stress already beginning on the supply chains, right? Because they were set for one type of commodity, and now there was something else with more speed, with more agility being required. We also then saw that as the economy started settling down or around pandemic, and the governments were bailing out companies, but also giving cash in hands of consumers, that led to a lot of buying of the products. And Ben, as you very rightly mentioned in the beginning, that was the time when there was no share of wallet going to services. So a lot of focus and almost all the spending was on products that had to be shipped from the Asian economies. And then if you kind of couple that with the initial pullout of the capacities, and then refurbishing capacities to basically ship over the goods, it was quite chaotic over a period of months, that we saw that our customers were dealing with. But where does it stand today? Just sort of diving a little bit deeper into the transportation segment. If we talk about, how are we going to make our supply chains more resilient? First thing is that the largest players in the market, the carriers in the market, have been putting a high focus on restoring capacity and balance. This will not happen overnight. There are already a lot of things that have sort of gone out of the line, and to bring them back on track is going to be a massive effort. But if you see what some of the players are doing, they are infusing capacities on the biggest trains between, let's say, Asia and North America, also Asia and Europe previously. There are carriers that have been buying more containers, more equipments. They're trucking companies that are expanding their fleets. And we're also seeing more frequency of intercontinental rail network. All of this is to basically support the increased demands that have come on supply chains. But we cannot really say that we are going to be out of this anytime soon. In fact, our analysis is that most of 2022 will also continue to be under stress from a transportation and distribution point of view. It is absolutely right that inventories, they're looking that they will start to stabilize, but they have been backed up so much that to restore initial levels, it will still take a while before the products are in the places that there are. But how deep will this stress continue to be? Then we think that we have to look at a few more data points, to really assess on the transportation and distribution capacities. And over there, again, Ben, as you rightly mentioned, we are seeing that the global orders are stabilizing. The companies are already bursting through seams, right? So they are definitely discussing or reassessing the rationale of going to continue to order a lot more. And of course, there is also a projection that the consumer spending will kind of stabilize and come back to pre-pandemic levels once people are able to step out and spend a little bit more on other services. So from a transportation point of view, maybe in the next 2 or 3, 4 quarters, things will start to stabilize. However, the pandemic definitely has already triggered the structural changes in the supply chains. And I think, again, before we talk about what does it take to build long-term resilient and flexible supply chains, let's just take a moment to understand what caused so much of chaos and panic in the first place. Of course, a lot of things that we had never seen before happened, but it's also true. And increasingly, a lot of our customers do talk about this, that before pandemic or time period before this, supply chains, the parameters that were used to set up supply chains were not really geared to manage stress. So the supply chains were always, or the priorities were kind of cost optimization, working with many partners, sourcing from many different locations, often again for buying cheaper products, and oftentimes just concentrating the nodes a bit too much. So if we've been talking to our customers, and the biggest challenge that we have seen is the lack of visibility. And the questions were literally as simple as, where are my products? When are the things starting from one part of the globe to the others? So if I talk about companies that are not only Asian, but also companies that have big stake in Asia, it was often the gap between the two sides of the world that led to a lot of delay in decision-making and hence action, right? So if we now keep that in mind, and we have of late been talking a lot about how will the future look like, what are the fundamental changes that are going to come about that will enable the companies, big or small, deal with such shocks a bit better. And what does resilience really mean? So, given the fact that disruptions are not going to go away, if anything, they will keep coming back more frequently, we can crystallize and we can basically synthesize all the learnings from our customers, the big companies, and also what the supply chain executives are not talking about. There are 4 fundamental things that we see happening or should happen, and it would do a lot of good to companies to focus on these parameters. The first is to truly digitalize the supply chains and use technology in a way that not just gives information, it gives actionable information. It also means that people in different teams and across functions need to be able to work with technology in a way that they can extract the information and take the action as necessary on the spot. So that's first and foremost the most important thing to bring resilience into the supply chains. The second thing is to collaborate with right partners. Now, I'm not going to comment on the number of partners a company should have. There's no magic number to say, are they too many or too less? But it is increasingly important that companies and supply chain executives select partners that take accountability, that are not just bringing value today to the supply chain design, but will continue to bring best practices and will continue to invest for you to create value creation, to create more value for the company. And this is something that the customers that have actually succeeded relatively, I should say, through the pandemic, they have told us that one of the biggest differentiators was that they had strategic providers, or they have strategic providers, and they have brought them earlier into the whole decision-making process, right? So it's not just about, here are my goods, pick them and ship them. It's about understand what my business needs and help me create a supply chain that supports that. And I think that if the supply chain executives get these two things right, then actually it leaves them more time to start looking more at with a foresight towards their network design, right? Which means that they will be able to map out their supply chains end to end and to start stress testing the supply chains, maybe even create small disruptive events and see how their teams and their networks react to those events, whether their resilience is only on paper or can it actually be executed on the ground. And that is an increasing focus of the companies all over the world. And finally, if I talk about also the increasing role that supply chain executives have in informing and shaping business strategies, we have now a number of times talked about the need to go out and get essential raw materials or essential finished goods from multiple sources. But what we sometimes sort of don't pay enough attention to is, does that company or does that location has the right infrastructure to actually carry the goods out, right? And this is where I think the supply chain professionals can make a lot of difference into informing the strategies of the business. It is very important, and as Christine covered greatly, there is also an increasing necessity for the logistics teams to know the consumer trends, the consumer demands, and be able to set up the economies accordingly, which means choosing carbon-friendly or carbon-neutral operations, which means choosing partners that can basically give omni-channel options to your company. And finally, it also means knowing where the business is going next, and then setting up the supply chains with resilience in all those factors. So that's where I will leave it right now. But we have, as I mentioned, have been in touch with a lot of companies and customers, and we regularly bring them in, mostly to also help us understand what can we do differently and better for their companies. But these themes are recurrent. These themes are emerging as the ones that are really going to be the ones that will help in setting up resilient supply chains.
Amita, thank you very much. It sounds like there is change, but the change is not so much in where the products are produced, but how we ship those products. Digitizing supply chains and building strategic networks and so forth. Can I ask you a follow-up question? Is climate change the next big shock for the industry? Is the industry prepared for governments coming in and imposing regulations around clean fuels, or will that cause yet more disruption?
Yeah, so Ben, this is a little bit like looking at a crystal ball, right? I think this is the ability to, or the mindset of the companies and large players to have the eagerness to adopt, if I may say. I think the governments will definitely come. There's a lot of pressure, and they rightly should, and they should do so as well. Because if you especially go around and see the emerging economies, there's still a lot of stake that governments have in infrastructure, the control that they have on assets and logistics and ports, terminals, sometimes even hinterland movements. So for sure, governments will have and should have, a lot of say in setting standards. How the private sector reacts to that, I think that is going to be a very personal decision. But what we are pretty sure of, and that's almost a writing on the wall, that the players that are not ready to adopt and adapt will not be the ones that will be preferred partners for much longer. right? It is quite important to invest in that field. And for sure, it's not going to be easy. I think that, and we see that for a short period of time, maybe even the consumers will feel the pressure of paying a little bit more for the right solutions. But with the effort that is being put out there, with all the recent discussions that we have seen, there's also an expectation that over a period of time, the cost of these fuels is going to stabilize. And it will find the economies that will then make it easier for the private companies, the consumers, and the government to really make it a reality. But is it going to be easy in the beginning? Not at all.
That's a good point to end. Amita, thank you very much. I want to hand over to our next speaker, Anson Bailey, again, Head of Consumer and Retail ASPAC, Head of Technology KPM China, and a Director of PBEC. Anson, over to you.
Thanks, Ben. Great to be here at the PBEC live session, and some great insights already shared with us, Ben, from Amita and Christine. So I hope I can keep it going. I'm going to share my screen right now, and hopefully you'll be able to see the slides. Is that okay? Hopefully you can see them.
All good, thank you.
Thank you, thanks, Ben. And I really wanted to follow on from Amita as well, because I think both Christine and Amita both, I think, shared some very clear messages with us. We heard about China being the 1,000-pound gorilla, but there is hope. And I think we are going to see a number of changes. And as Amita also, I think, mentioned, we've also seen unforeseeable changes in products in demand. And I'd love to point, Amita, about the low visibility and all the manual data, because that's exactly what we're hearing from our clients as well. What I wanted to do right now was really just to spend a few minutes to go through some prepared slides to kind of hopefully reinforce Christine's point of view and what we just heard from Amita as well. But I think what we've got to do, Ben, is we've also got to look at, of course, we've got to look at the sourcing industry, but we certainly also have to look at consumers. And we've got to ensure that we understand, or try and understand, those consumers in this new reality. And as we all know, we're faced with this perfect storm, right? We know the geopolitical environment, the US-China trade tensions, but equally COVID-19. One thing that has happened is that COVID-19 has accelerated everything digitally. It's also, I think, accelerated technology. And then we've also got to contend with all of those demographic challenges. I've spent several years talking about millennials. Now I've got to talk about the Gen Zs. So we'll talk about them a little bit later on. And I also just wanted to go back to 11/11, the very big online shopping festival, and we've got both Alibaba and JD.com across China. And again, what is amazing is that consumers are still consuming. There was a big discussion about, oh, well, maybe we're going to see a drop-off in terms of demand. But we still saw that 11/11 was actually the biggest shopping festival day ever, Singles Day. But there are some really interesting things. Retail success, absolutely, but it's also been some really, I think we've also seen some very significant challenges as well, Ben. Packaging, I think we all recognize that we're going to have to do a hell of a lot better on a number of areas. So the shopping festivals, they're here to stay. The question mark for me is, are we going to see more responsible consumption in terms of, are you going to buy what you need, or perhaps buy less, but buy better? But one of the interesting things that we did see with Singles Day, Ben, was that actually suddenly ESG is on the agenda. Social and environmental responsibility was being discussed. we also heard a lot about, okay, we're going to reduce those CO2 emissions by 30%. We're really going to drive green logistics and green coupons. So again, there is a glimmer of hope. And as we said, you know, China is a huge market. So it is interesting to see what those Chinese consumers are doing as well. But what I did want to just talk about just for a moment was those new green consumers for 2022 and beyond. The Gen Zs, you know, there are 300 million millennials that are already a big consumer base. But the next generation, the Gen Zs, we've got a similar number, maybe 280 to 300 million, depending which investment banker report you read. But that's still a very large number. But one thing is for sure, Ben, those Gen Z consumers are far more socially aware. They're certainly a hell of a lot more tech savvy and media savvy. And they're watching you. And they're watching you, whether you're in Beijing, Bangkok, or Boston. And the other interesting thing is they will call you out if you are not walking the talk, if you don't share their same values. So I think this is interesting because really, you know, climate change, as Christine said, you know, we do need to do a lot more. But as Christine also said, the world is now bought into that 1.5 degrees. And we heard a lot, didn't we, in the last couple of weeks about COP26. And as you know, Ben, you and I have had a lot of discussions over the last few years in terms of, you know, China, and as Christine said, being the 1,000-pound gorilla in the room. You know, the interesting thing is that China is still a massive gorilla, but perhaps it's a 700-pound gorilla, because we are now seeing this equalization. We're seeing Asia, South Asia, and Southeast Asia scaling up as well. So that, I think, is interesting because we have seen a lot more diversification. My clients equally still, of course, have that base in China, but increasingly, they don't want all of their eggs in one basket. And equally, they want to have perhaps that risk shared across a number of different locations as well. Now, last week, we actually launched a new paper. And again, I just wanted to quickly share just some of the key findings with everybody, because this paper was done together with Sarai. Sarai is one of those interesting startups here in Hong Kong. I have to say, they're probably one of the best funded startups in Hong Kong because HSBC are standing behind them. It's a new B2B platform for manufacturing and sourcing. They've got about 17,500 manufacturers and sourcing businesses and the brands on that platform. And again, you know, the key messages is, you know, what are we hearing? It was interesting because we definitely heard a lot about increased transparency, and I think that is something that we are going to see more and more of. Corporate reputations, and so there's a risk there. They still, of course, are looking at how they can drive operational excellence, but there are a number of external drivers, Ben, and I think this is interesting because we've now suddenly seen this perfect storm emerge, right? We've got the banks now really talking about how they are going to look at your sustainable agenda if you want to get cheaper financing. The governments and the regulators now, so I think we can expect a lot more regulations, but we're also seeing a consumer focus, and not just the Gen Zs. I think across the board there's greater awareness, as Christine said, of that 1.5 degrees. You've got the media playing a role. You've got your own employees, again, playing a role. So we've got this perfect storm that is here. And equally, in the report, it really highlighted two components of supply chain transparency, and that was really around the visibility as well as the traceability. Do you really know all of your suppliers of everything, of all the raw materials that are used in your products? And equally, can you trace all of those materials and component parts? And these are big questions now that are being asked. So what we are seeing, Ben, and I think it's fair to say, is that brands are actually now waking up. And I do think they are perhaps making a more concerted effort with regards to their quest for sustainability. So I think that's a good thing, because I've spent a number of years really talking about this, and people were kind of waving these glossy CSR papers and sustainability papers, but it was just marketing speak. I think the marketing speak is now ending, or I mean, it's still marketing speak, but it, now companies now realize they do need to do something. And in the paper that we released last week, Ben, one of the key messages, well, there were a couple of different recommendations, and I think it kind of correlates well with what Amita was talking about, that kind of internal alignment. That's going to be very important. Collaboration with the right partners. I think that was something else that I heard Amita saying, that you've got to collaborate with the right partners. Also understanding all the data and maybe the standardization of the data, but also using that technology, because as we heard, there was incredibly low visibility, and equally there was a lot of manual data, and that's exactly what we heard. And as we mentioned, we did see COP26, didn't we, in the last couple of weeks, and it was quite interesting. Stella McCartney at COP26 was saying that the fashion industry is one of the worst for climate change. So what are we going to do about it? So there was actually, a lot of sectors being called out in the last couple of weeks. We, of course, did hear, and Christine already alluded to it, China and India looking at how they can phase out coal. But equally, Prime Minister Modi talked in his keynote that they were going to get to net zero by 2070. Now, that seemed a little bit of a cop-out at COP26, but these are things I think we are going to perhaps see different speeds. But one thing is for sure, and that is we have a lot of work to do, and the clock is ticking. So, I think all of us have really got to come together. And equally, I'm sure Amita has been dealing with all the fallout of global shipping and logistics. SNAFU is a US Marine terminology. Situation normal, I'll say it politely, all messed up, right? And so this is the other big issue that we've got right now. And equally, we have got to be discussing about ESG across our entire supply chains. But that also comes with a discussion around trust, transparency, and really, how can we decarbonize? Because it's one thing to say it, and we've been hearing about we're going to be net zero by 2030, but equally, as we know, saying and doing are very, very different things, aren't they? Equally, last week, our global chairman, Bill Thomas, sat down with Paul Polman, the former CEO of Unilever, to talk about, again, what can we do in terms of traditional corporate social responsibility is actually inadequate for our times, and that we've all got to rethink what business is and how it drives change in our world. And increasingly, we're being asked to, again, embrace partnerships and work together, be open and honest in our communications, right? We've also got to take ownership of all the company impacts and also own up to them. Be authentic. I was on a panel last week with Sonali Figueres, the editor-in-chief of Green Queen, and she really took those brands to task and said, you've got to be authentic, right? Stop greenwashing. So I think these are all things that we've got to be asking ourselves, and are we purpose-led businesses for the future? And take a good look at ourselves. And then, Ben, just again in conclusion, and sorry, I'm a little bit over time, but I did want to say there are now emerging technologies, and I think we're not going to solve all of these issues without the use of data and tech. The platforms and the blockchain and AI, they're here. They will impact global supply chains. Equally, we've got to look at talent development, where we upskill and reskill everyone on areas such as ESG and data. And we're going to see, as I said, the rise of purpose-led businesses with a far greater focus on ESG and sustainability for the future, and get ready for increased transparency like never before, right? Because there is a lot of data, a lot of consumers have that data or those data points, and they're watching you, especially those digitally minded and tech savvy young Gen Z consumers. And above all, for everything to work, we are going to have to be far more transparent. So transparency across the entire supply chain is a must-have, not a nice-to-have. So Ben, they're my thoughts. Again, appreciate all of the sharing, and I'm again really looking forward to thoughts from Asif and from Chris, and then we can also have a further chat as well. So again, thank you very much, and back to you, Mr. Simpfendorfer.
Anson, thank you. Some really terrific insights there. A question for you. We've participated in the French Chamber's Made in Asia conferences over a number of years, and I'm always struck at those conferences that ESG is being a focus for many firms, and yet the challenge is price. Are consumers really ready to pay a price that would allow us to produce more sort of ESG-friendly goods? So can we do what you're proposing without governments intervening and getting more aggressive around regulation?
Ben, I think whether we like it or not, we are going to see more aggressive regulation. So we better get on, we better jump on the bandwagon. We better do something about it, because if we don't, we're going to get regulated anyway. So I do think that is something we can't stop. I think my big question, Ben, is the Gen Zs and the consumers are now jumping up and down, and they are really concerned about ethical sourcing. They're really concerned about the planet, but are they prepared to pay more? So again, this is just something, last week when I was with Sonali, she was really she was reaching out to all of the brands saying, hey, we have got to be prepared to pay more. We've got to be prepared to buy less, but buy better. So, there were some really key messages there. But Ben, I think that's the million-dollar question. What I would say, though, just to finish with, we do a customer excellence survey every year. The global one's just about to come out, a sneak preview. We looked at all the consumers around the world. 88% of those consumers in Hong Kong, for example, said that they would be prepared to pay more if they knew that these products are a lot more, environmentally friendly and ESG focused. So, again, that's a survey. It's certainly the highest I think I've ever seen those numbers, 88%. But again, what you say and what you do, Ben, that's the challenge.
Thank you, Anson. That's an encouraging number to end with. Much appreciated. I'd like to turn to our next speaker, Asif Ibrahim, Director, Bangladesh Garments Manufacturers and Exporters Association. Asif, it's a pleasure to have you here. Over to you.
Thank you, Ben. Very interesting to hear the perspective from my previous speakers. Of course, mine will be more from a practical standpoint as I represent the industry. Let me start off with the importance of this industry so that you can get a little bit of better perception about how we are situated. The ready-made garment industry is about 84% of the total export earnings of Bangladesh, and it employs about 3.5 million workers. Majority of them are women, and it has contributed immensely for the progress of this country from from being a least developed country to a graduating country 4 years from now. Tremendous importance. And when this COVID-19 pandemic hit us, we felt the impact first, I would say, from March of 2020. Obviously, our export destinations, they started to experience it 3 or 4 months earlier than that. But we started to feel the pinch around about March 2020. And the first hit that we got was cancellation of orders worth 3.15 billion US dollars from all the customers in North America and in Europe and in the rest of the world. Hence, we were in a very precarious situation regarding what to do about it. And at the same time, there was this massive issue of the health contingency, whether we start up the industry or not. What do we do in such a situation? At that particular time, when the government and the private sector came together very strongly, and the government at that time first announced the stimulus package to pay for 4 months of wages of the workers. And that there was conditionalities attached to it. We did mention a lot of use of technology before my speakers mentioned. What the government insisted is that we will pay for the wages for 4 months, but it has to go directly to their mobile banking account. So in a space of 3 weeks, almost close to 2.5 million mobile banking accounts were created for the workers. And that stimulus package that was given by the government through the central bank, through our association, through individual banks in which our members work, those money was distributed. So, and then at the same time, we made an international appeal to the international brand community to help us out. And so gradually, some of the orders started coming back, and also sitting with the government, we opened up using a staggered approach because we certainly couldn't keep the factories closed down for such a long time. So gradually the factory started, and over the last 1.5 years, we saw that, because of those decisions that was taken by the government and the industry, a slide was shown where it was shown that up to $3.17 billion is the export of Bangladesh, and we are bouncing back, and now we see the trend of international buyers also placing a lot of orders to Bangladesh. But the key question is what was mentioned by Anson just a few minutes ago, is about the issue of price. Circularity, environmental concerns, ESG, all those have been in discussions with on our end, who supply to the global market by our buyers. These concepts were brought in. The big brands, some of the more responsible ones, I wouldn't name them, but we all know some of them, who they are. A lot of European brands. They gave us or introduced us to these concepts, and they also sort of started insisting that if we in the supply chain do not invest in environmental sustainability, in technologies to reduce textile wastages, etc., we will not be able to survive as a key supplier of those international brands. Hence, the investment decisions were made in many factories. They made those investments, but unfortunately, those investments still has not reflected in any price increase from the international brands. So this is where I would, the key question of this discussion session going forward, what would be the involvement of the government? Certainly, if the brands do not come forward, if based on the 88% of the survey reports that said that they're willing to pay more, if brands do not engage in that, then certainly the governments will need to come forward, and some sort of a mechanism needs to be put in place so that we can, from our end, keep on investing in ESG, in circularity, in recycling our products, reduce the carbon footprint, which Bangladesh is obviously still very much carbon negative. But going forward, as we are industrializing, and we have these very ambitious plans of setting up special economic zones across the country. Illicit integration will mean more of that. More and more of the China's pie will come to Cambodia, to Vietnam, to Bangladesh, to Pakistan, to India, to Sri Lanka. So these are the big questions, how we will go forward with those strategies that from our individual association perspective, BGMEA, for the first time in 2020, we got 56 of our members in an association with Unilever to have the first sustainability reporting introduced in Bangladesh. We have also tied up with the UN SCAP Sustainable Business Network. I'm an executive council member of the Sustainable Business Network. And also we are now getting from the network, in collaboration with associations like BGMA in the region, to sign up as a corporate member and get them to also sign up with the UN Global Compact, so that we can also get them on board, or not only from the buyer's perspective or brand perspective, but for also our engagement with these international UN organizations to get these across our membership, the importance of sustainability and circularity and those issues. So I would emphasize that it is very, very important that number one, we have the responsible purchasing practices. If we are to address the issue of resiliency going forward, we have to have identification of the right partners in the supply chain, very much critical. Usage of technology to not only reduce time, but also reduce the carbon footprint. And of course, the issue of reporting and the involvement of government. I think those are the crucial areas that we need to focus on. In terms of the new models, I would say that enhancing the resilience of firms in the longer term would involve building new digital infrastructure and joining international agreements on industry-wide standards. I think that is something we need to get to. More than 3 decades of focus on optimization to minimize production cost, reduce inventories, and drive up capital utilization has resulted in a lean supply chain. We agree, but we have to remove the buffers and the flexibility of Asian companies, particularly the small businesses, the SMEs, who are the key economic drivers of these countries, who are no longer able to absorb these sort of disruptions. So this pandemic has taught us many lessons. We have to take lessons from the pandemic, and what I have discussed, we need to focus in those areas. Thank you very much.
Asit, thank you very much for that. Your final point, I think, is a really important one. The role of the small private companies, which account for a huge share of the global supply chain. Where does the capital come from to invest in decarbonization? Is it even out there? Is it private-led? Is it government-led? Is it multilateral-led?
Okay, Ben, there has been many funds. I would give an example for Bangladesh. There are 2 funds. One was the Green GCF, which was very much talked about, the GCF fund. I'm sure most all of you know about it. And the government also set up our own green climate fund through our central bank. The GCF, we could not make it at all successful because it had too much of conditionalities attached to it, which the local NIEs or the implementing entities could not reach the standard. So we, most of those funds went back or could not be utilized. But the Green Climate Fund that was set up by the government of Bangladesh through the central bank, which allowed entrepreneurs or small businesses to access those funds at a cheaper interest rate than the standard interest rate, that was an effective mechanism. And we could see that certain investments were made using that fund. But then again, it's not tacked up with increased prices. So increased price is a must also from our customers. How long will the government subsidize?
Well understood. Asif, again, very grateful. Thank you for those insights. I'm going to pass over to our next speaker now, Chris Clegg, Asia Editorial Lead, Trade and Globalization at the EIU. Chris, welcome. Over to you.
Thank you for having me, and thank you to PBEC for having me, and to the panelists for the interesting discussion so far. I, working at The Economist, usually am sitting virtually in Ben's position, so I'm very cognizant of being on time and on topic, so I will keep my remarks as brief as possible. Do have to speak about supply chains quite a bit. Obviously, this is a very hot topic, and one of the questions I always ask to the virtual audience, though it would play better if we were in person, was we talk about the resiliency of supply chains, but during the height of the pandemic, was there anything you couldn't get? If you like I live in Japan, for example, there were temporary shortages of masks and toilet paper, very temporary. Now I can't get a new Trek bicycle, but otherwise the supply chains worked. So it seems to me that there's a lot of, and of course, who could forget the great hummus shortage in Hong Kong in 2020, but basically everything that people needed, they could still obtain, right? So there's a lot of hand-wringing about resiliency in supply chains, but the system largely worked. Now, I'm sure it was very stressful for people like Amita, and it has taught us lessons that we need to learn for future pandemics or future shocks. And are global supply chains perfect? No. But I think they've been portrayed as not functioning nearly as well as they actually did. We are starting to see some of the lingering bottlenecks tighten up a bit, and we've seen that in inflation numbers in the US. But for the most part, they worked. So there are lessons to be learned, but I also think we need to acknowledge the fact that global supply chains were more resilient than we appreciate, and we need to acknowledge that. But the pandemic has provided impetus to shoring things up, pun semi-intended there. So what does that mean? So I'm going to talk about two different sort of topics: efficiency versus resiliency. That's something that's come up in our research, and I'm sure it's come up in research that Anna's firm has done and your firm, Ben. I think it's something of a false dichotomy. If a supply chain is resilient, does that mean it's inefficient? If it's guarded against future shocks, does that mean it's inefficient? No. I think that's a false dichotomy. One of the other topics that comes up quite a bit is diversification, and I think that makes sense in the context of what we've been going through over the last 2 years or year and a half plus. But there are limits to diversification, and I think sort of my co-panelists here could back me up on this. I mean, there's only so many places you can source raw materials from. There's only so many countries that can provide the labor force that you need. So there are limits to diversification. And also a related topic to that is regionalization. They're sort of intertwined. And the global supply chains worked because they were global. And narrowing things down is going to make them more susceptible to shocks rather than more resilient. So a few other points I'd like to make, just to stick on the supply chain topic, on what is being ignored when we're talking about the future of supply chains. I think one thing that hasn't been mentioned at all yet, and is never mentioned in these supply chain discussions, is the potential demise of the World Trade Organization. It has been a moribund institution for quite some time now, but it at least had the dispute settlement body, which was serving as sort of a guardrail from preventing trade disputes from getting out of hand. But the dispute settlement body is no longer functioning. And that is largely it's a legacy of the Trump administration, but the Biden administration hasn't done much to correct that in its first year in office. So we have to think about what happens if the WTO does eventually become a useless or meaningless institution. Some of you might know Debbie Elms. She's fairly well known in trade circles in Asia, makes the point that the WTO is like oxygen to the global trading system. You only appreciate it in its absence, right? So not talking about the WTO in the context of future supply chains seems to me to be a bit of an oversight. So if the WTO were to fall apart or cease to be a functioning institution altogether, what are we looking at? We're looking at a transition from a rules-based trading system to a power-based trading system. And of course, US and China are at the core of that, but they're not the only two countries involved. The other thing we're looking at in this context, or this potential scenario, is friend-shoring, or which is kind of a awkward phrase, or ally shoring, or countries procuring strategic goods or developing relationships with countries that they are allies with, and trying to cut out countries that they are not allies with for these strategic goods. Cognizant of the time here. So that's another point I think we can have a discussion about. And then the last one, and this goes to what Asif was saying about SMEs. One thing that gets overlooked in supply chains and the global trade sort of environment is finance. The ADB just came out, the Asian Development Bank just came out with one of its reports on the trade finance gap, showing that it expanded to 1.7 trillion in 2020, which is up $200 billion over 2018, the last time they came out with a report. Trade finance is crucial for SMEs. It's less of a problem for large MNCs, but it's very important for SMEs. So if we're looking at supply chain resiliency and building up a more robust trading environment, you can't ignore trade finance, but it does tend to get ignored in these sorts of discussions. And the last point I would make, which is related to that, is there's a sort of a Chinese parable that I like to use in this context about an emperor asking artists what's more difficult to paint, dogs or demons. Ben might be familiar with this. And his answer is dogs are more difficult to paint because everybody knows what a dog looks like. You can use your imagination for a demon. And it doesn't matter what a demon looks like because a demon can look like anything. I think when it comes to global trade and climate change, which I have a rather jaundiced view on, but I haven't expressed, we spend a lot of time talking about demons and not enough time talking about and painting dogs because they're a more difficult thing to do. So I think that's my 10 minutes. I'll wrap it up there.
Chris, thanks very much. And your macro view, even a jaundiced macro view, is always very well appreciated. If you were to speculate, what would the global trade system look like 5 years from now? And recognizing it's a complex subject, but if you had to pin a guess to something.
As much as it pains me to say this, having studied at the WTO, I think the WTO is a dying institution. So if I had to make one big call over the next 5 years, I would say that we are moving towards a more power-based trading environment, and that the rules of the road that have helped supply chains expand over the last 20 or 30 years have been instrumental in their expansion. That system is unfortunately dying. So I think there's the economic logic behind the structure of supply chains and the way that countries trade with each other. but those rules will no longer exist, or at least will be far less robust than they used to be.
Well understood. That is fabulous. Christine, I'm going to come back to you now. Chris has said the WTO is a dying institution. They're interested in your response to that.
Well, I think the WTO has been in great trouble for some time. And I don't know whether this is because of, the countries, the member countries, not wanting to abide by all the rules, or whether that the WTO has lost some of its credibility overall in any case. And, there has been protest and so on about globalization itself, and the WTO kind of represents that. So today, if we were to look at the WTO and what is it that will make it fail, is it that the countries no longer want to use it? And is it that some countries might want to reform it? And is it reformable? And how long and what would it take? Now, the other thing about saying goodbye to something, let's say Chris is absolutely right, and it is going to disappear. It could be a long goodbye, because you're asking about 5 years. 5 years is quite a short time when nobody wants to deal with the problem. Because one thing, if you really have a good agenda, is to say, right, this is how we want to reform it. But if you kind of want to move on to something else and just let it die, it could be a very long goodbye. I think what's more interesting also about, because you can just leave it alone, that's what I'm saying, right? So nothing happens. But what Christopher said that I think was very interesting is we seem also at the same time to be moving to a power basis, right? Relative powers of countries that will define at least some of the items, and whether the big ticket items of raw materials, of commodities, will and technology, right? It will be front and center, and how those things will really develop. I'll just make one last comment here. We see the US having, that's the basis of a lot of our geopolitical issues right now. Is climate change possibly one thing that will let them hang together to some extent? Because if the US and China both agrees to 1.5 being the existential red line, to what extent, and might it play into this overall conflict? Now, I don't know what the answer is, but I think this space is worth watching, because you are seeing these two continuing to dance with each other, and they both see that this is a hopeful space, although things at this moment not looking very good.
Yeah, it's an excellent point. And for all the talk of a Cold War, I guess the difference between now and 50 years ago is that there is a climate, may well be a platform for collaboration, negotiation. Hey, Chris, we do have a question here again on the WTO. I'm going to read it out. It seems that now, under the new Director General, that the WTO is in a better position than ever compared to the last 4 years, and making headway on many issues on its plate. What would be your response to that?
Yes, so I've interviewed the new DG on a couple of occasions. She's very smart, very motivated. I think it's great that they finally appointed a woman and someone from Africa to lead the WTO. I think she's been given poison chalice, unfortunately. If you have to stake the future of an organization, or the viability of an organization, on the outcome of a fisheries agreement that's been lingering for 20 years and it doesn't look is going to get resolved, that's not a good sign. And the fact that the Biden administration has been, and the US is not blameless in this, of course, the fact that the Biden administration has not given the attention it needs to maintaining the dispute settlement body doesn't bode well for the organization's future. So yeah, those would be the two reasons.
Thank you very much. Anita, if I could come back to you. You made reference in your slides to the need to share data and the need for data transparency. I think it's an interesting one because Anson also referenced that, but it's quite challenging. Not every company wants to open up their ERP system, not least to competitors. How realistic is that goal? What are the challenges going forward?
Yeah, thanks. It's a great question, Ben. I think it's true. Not all companies are ready, and it's also a lot to do with the existing compliance setup, right, and the security setup that companies have. I think data sharing is first a matter of trust. It's also a matter of having strong underlying technology that can still enable the companies with the right vigilance, right? I think one sort of necessary evil that comes with transferring or sharing data too much is the exposure that the companies get, the ability for others to attack. And not too long ago, we used to have this saying, right, that there are only two types of companies. One, those who have gone through cyber attack, and the others, those who will go through cyber attack, right? So keeping that in mind, it's not an easy choice. But I feel like we are at a point where there's a decision to be made, because without sharing data and without letting your partners look at some of your data, you will be leaving some value on table, right? So this is something that that goes back to selecting the right partners, making sure that the companies that you work with are investing in security measures, in building confidence, in how they handle their data, and will allow you to basically audit as necessary or when necessary. And it's a fine balance. So I don't think that it will now swing all the way to the other end, but some shifts will happen. And I think the over governance or the over guarding of personal information might fade away a little bit. When I say personal, I mean company.
That's super. And Asif, speaking from the view of a private manufacturer in Bangladesh, data sharing, how much actually takes place? Is it realistic to expect that the private sector, particularly small manufacturers, have the systems in place to be able to share data?
When you talk about enterprise resource system, I would say it is still not very much in great percentage. Most of these companies still are in very elementary stages of bookkeeping, accounting, and MIS. Basically very much dependent on tools and software like Microsoft Office. Hence, the infrastructure is not yet there for sharing of data. But during our the exercise that we did with the 56 companies with Unilever for sustainability reporting, these companies were capable and they came forth. So some good examples are there, but across the industry in general, the infrastructure is yet to be developed. It takes some time.
Well understood. And I mean, innovation will be important to this story. Anson, I know you are very focused on innovation. And I'm just interested, where do you see the innovation hotspots in Asia with regards to supply chain? And if you had some examples to share, I'm sure the audience would love to hear.
Yeah, Ben, absolutely. And innovation, as you know, that is something that I'm very focused on these days. But I also, if you don't mind, I just want to go back to a couple of points, because Amita made a very good point. Collaborate with the right partners. And I think that what we're going to see is we're probably going to see a more selective basis in terms of sharing all of that data. Certainly that's what I'm kind of hearing from my clients as well, is that they are now starting to collaborate more, but equally they're very cognizant of the fact that, cyber, for example, is a massive challenge. There are, I think, globally 30,000 websites hacked every day. Cisco were talking about, there were 20 million breach records on a monthly basis. I mean, we're talking about some large numbers, Ben. So the more you open up your data, the more at risk you are as well. So I think that is a key message. But I do think, yeah, collaboration is going to be a key driver. And I also want to go back to Asif's point as well, and the fact that we heard that brands themselves have to be responsible. They do have to collaborate. They can't just talk about this amazing collaboration. And Asif, I'm sure you'll agree that I think if we look back at 2020, as you said, there's a lot of buyers that cancelled their orders. That was a huge challenge for the Asian factories and the manufacturers, because on one hand you kind of talk about, oh yeah, we're going to collaborate, and yet on the other hand you cancel all these orders. And I think equally the Western brands did not cover themselves in glory with regards to working and again, and I think the other point I wanted to raise, and Asif made a point there, there's a cost. If you're asking the manufacturers to do all of these good things, if you're asking them to be more sustainable and take on all of those ESG practices, are they willing to cover that cost as well? Right? So I think that again, the innovation must be collaborative as well, Ben. And I think that's another key message for all of us. And we've got to innovate around all the things that we're doing. Last week, I was talking to the chief sourcing officer at Puma, Anne-Laure Decors. Asif, I'm not too sure if you know Anne-Laure, but she is a massive Bangladesh fan. She loves Bangladesh. But they've also now started to roll out a vendor finance program at Puma, because they realize that they have to collaborate. And interestingly enough, I think they only cancelled about 0.6% of their orders. So, there are good players and there are bad players, Ben. And I think that's what we've got to recognize. And again, you've also got to walk the talk. You can't just do all the greenwashing and say, oh yeah, we're going to do this, and yet you don't. So I think that's something that we are going to see. But Ben, just coming back to innovation for a sec, one thing that I've seen with, for example, the startup ecosystem, which I'm very closely connected with here in Hong Kong, there are some great startups that are really looking at how they can drive fashion sustainability. Those 3D, the 3D images and tech platforms, the virtual sampling, so that there are some really cool startups. But again, guess what? We are going to have to collaborate, right? The big corporates also need to collaborate with the startup ecosystem in order to really drive that new tech, new innovation. And I was, again, last week, I was over at the Mills Fabrica, Ben. We've been over there as well. A great place where they're looking at driving innovation and driving technology. But there are some super startups, people like Unspun, Ben, that are doing some cool things around that 3D modeling, and people like G2G, Garment to Garment, that are working with the H&M Foundation, looking at really deconstructing your old pullovers and sweaters and turning them into brand new items of clothing. But guess what, Ben? There's a cost, right? It's not cheap. So that's the other challenge that we all have.
Yeah, absolutely. And you've spoken about Hong Kong ecosystems. Christine, a final question. If you would reflect on the development of ecosystems in Hong Kong as a hub for the garment business, do you see those systems developing?
I do. I'm actually very excited, and I agree with Anson. The business in Hong Kong itself, it's in the hands of a number of companies who are on the production side, and they've been there a long time. They're very well known. They produce for all the big brands, so they can move the needle. So the issue is, what is new? So the technology and the innovation and those things that Anson talked about, which I also know about, is what will move the needle. So how can we all collaborate to do that? And then, of course, the next part of it is the transportation, the logistics part. So if we can knit all of that together, have it produced somewhere where the country, where your factories are also located, if they're lower carbon, if they're switching to renewables faster, that means your end product is going to be much more low carbon as a whole. So I think you need the countries themselves. And you know what Asif said about countries, obviously governments can't keep coming up with subsidies, but it's really important that they see what they can do that the SMEs and the businesses can't do, like invest in clean energy, like helping because the brands are not paying. Therefore, the government has to do it to enable their SMEs to continue to survive.
A positive note to end with there. I want to thank all our speakers today, Christine, Amita, Anson, Asif, Chris. A real pleasure to host you all today. Fabulous discussion. Thanks again to all the attendees as well. Before we sign off, I just want to flag up at 5 o'clock today, we have session 8 on, very aptly, financing the technological change, the role of IFCs in Asia Pacific. So please do join. My thanks to everyone and have a great day. Signing off.
Thank you. Have a good day.
Thanks, Ben.
Bye.
Thank you.